everyone, and welcome back to another session of Market Outlook with me, Kavita Agrawal, the founder of EXP-Invest. Today, we are here to discuss what has happened in the chart of Nifty, Bank Nifty, and of course, the intersector relative analysis. The objective is very simple. We want to determine what has happened in the market so far and what does it tell us about the market action which is expected to unfold next week. The objective of doing this is simply to set up our expectations for the market next week and determine our strategy. We also want to realign our focus towards the right sectors so that our money is always dedicated to the stocks where the momentum is the most active. So without much delay, let's move on to the chart. Okay, so on my screen, what you're seeing now is the 3-minute time frame of Nifty, right? So we begin with the 3-minute time frame because we want to get a very comprehensive understanding of how the price action has unfolded on a very detailed level, and one by one we will go to one time frame higher. All right. So on this 3-minute time frame, what we see is the resistance which was mentioned last week of 20,200. It acted out beautifully. We saw a strong gap down right from the top, and the Nifty continued to slide. Now, today's day has been very volatile, lots of sideways consolidation. We opened a little bit strong, but then went down to retest the low of 19,600, went back up to retest the high of 19,800 approximately, and came back down nearly how many points? 140 points approximately. So this has been a very volatile day, but very volatile only from the perspective of those who do intraday, or you who is a swing trader or momentum trader. Today was a day to not do anything much. My objective is, as a swing trader, to not get engaged with the market when it's volatile. I want the market to trend. So when the market is in a momentum like this, and this usually happens right after the RSI has breached the level of 30 on the 3-minute time frame, I simply sit back and relax. I might even watch a movie, or if I'm feeling a little ambitious, I might just go over some extra charts, do some past trade analysis to see where I can improve myself. But engagement with the market is very minimal on days when the market is either in sideways momentum or in a downside momentum, because my focus is simply to make money when the market is in the upside momentum. Okay, now with that, let's move on to the 15-minute time frame. So one thing that I do want to mention on the 3-minute time frame is right here you can see that after this 30 had been breached on the RSI, right? So even though I know that I'm going to sit back, I also start paying attention to the market, because now I'm looking for a new low in the price with the absence of new low on the RSI. Now, if you know what I'm talking about, a lower low in price and a higher low in RSI, I'm basically talking about a positive divergence. The occurrence of this positive divergence then becomes our signal that we may now start to deploy our cash. It was really amazing that when Nifty had broken this support of 20,140 approximately, almost all of the active ideas in my Trade Together program given to my swing trading participants had triggered stop loss, right? So in the Esteem plan, where we have 5 active positions, right now there is only 1 active position. In the Elite plan, where there are usually 10 active positions, right now there are only 4 active positions. So when the market is beginning to top out or starting to slide, nothing can be better than your stop losses getting triggered and your profits getting realized. Okay, because if you don't do that, then you'll see that what once stood at 35,000 unrealized profit, by the end of the market correction may come down to 2,000 unrealized loss, which is not something we want. We want to invest the original capital plus the 35,000 profit into a new stock or in the same stock if there is opportunity. That's the whole idea in swing trading. Now coming to the 15-minute time frame. What I'm seeing here is on the 15-minute time frame also when the support of 19,760 was reached. So if you're in my Telegram channel, Then you know that I mentioned that the market had two supports. One was 19,900, another was 19,760, right? Now this support was breached, but it doesn't worry me. The reason being that the RSI forged its proper low when the level of 19,760 was reached. And another thing that you can see here is that even the price has been sliding lower, the RSI has been sliding upward, which means we have positive divergence on two of our intraday charts. One is the 3 minute and another is the 15-minute time frame. And incidentally, this correction that has happened all the way from 20,200 to 19,680 roughly, this has been a significant correction only on these two intraday charts. What do I mean by that? Let's move on to the 75-minute time frame to get a better understanding of what I just said. So on the 75-minute time frame, this correction that has happened is not even a correction, it's just a breather. Okay, there is nothing scary about it, there is nothing to worry about it, because it is very normal in the market to see a correction after a strong rally that we saw. So we saw the market rally nearly 5% in a matter of just 2 weeks, right? Almost more than 950%, almost 1,000% in a matter of just 15 days. So obviously the market's going to take some correction after that. Let's quickly draw Fibonacci retracement and see what percentage this coincides with. And if you're with me, you can see that the correction that has already taken place coincides with almost the 61.8% Fibonacci ratio, which is the golden retracement level. Okay. Now, what have we seen? We've seen a positive divergence in 3-minute time frame. We've seen a positive divergence on 15-minute time frame. We've also seen the golden ratio come very close to the market. Another positive observation is that, number one, when the high of 20,200 was forged, the RSI was very, very bullish on the 75-minute time frame. And now what we're seeing is the RSI has come down and started to flatten out near the level of 40. Why is the level of 40 significant? Because in any market, when the underlying trend is very bullish, then in the concerned time frame that we are trying to make observations on, the level of 40 acts as the support on RSI. So in a bull trend, the RSI range is usually 40 to 60 plus or 70 plus. In a bear trend, the range becomes 60 becomes the resistance and 30 minus becomes the support. So 30 level gets breached repeatedly, and on a bull trend, the level of 70 gets breached repeatedly. What can we see here? That ever since the major bull run started here in Nifty, we have been seeing this trend repeatedly, and you can make this observation all the way as back as you want to go. You can make that observation, right? Now, you may think that here the level of 40 breached, but remember that there is a time frame higher than the 75-minute time frame where we have come now, the daily time frame. And even on the daily time frame, because the trend is unfolding, if there has been a big bull run with no correction on the daily time frame, there is a necessity for the RSI to revisit the support level on the daily time frame, which means that one time frame lower, that is the 75-minute time frame, will see a slightly bigger correction. So this is you may call this alignment, you may call this eclipsing, but the point being, irrespective of what terminology you use, what matters is that when you're doing chart analysis, when you're doing price action activity, price action analysis, you have to remember to take into consideration the higher time frames as well as the lower time frame. And you should only make your trades when all your time frames are in alignment. And that's what we are seeing in Nifty, that all the time frames are in very good alignment. A fresh trend of upside, a fresh leg of upside, 19,200 support was touched on the index. And this fresh leg of upside has taken the first leg of correction, which has already completed already almost completed the 61.8% retracement. And we can expect the trend to start continuing from the next week onwards. Now, if the trend begins to continue, then what are we expecting on the upside? My personal target on the index is the level of 20,600, right? So this uptrend which is unfolding, I expect the level of 20,600 to be my first target. It is possible now, since the Nifty has, you can see this blue trend line, right? So this blue trend line is actually my target. And if I see as of today, then that gives me a target of even 20,900. So if you are watching this live, then let me tell you that it is the first time that I am talking about this key target, new target of 20,900 on the chart of Nifty, because I believe that Nifty has enough momentum to scale its new high of 20,900 as soon as the next 6 months. Okay, so this was about Nifty. I have given you the key resistance levels. Now let me also tell you about the key support level. So right now Nifty is around the level of 19,680. Below this, I believe 19,600 is a very important support zone. The reason being that the 200 EMA of the 75-minute time frame is there, and we've seen the 200 EMA of the 75-minute time frame has acted as key support multiple times. If that is breached, then 19th our next support. Talking about resistance, Nifty has next resistance, of course, at the level of 19,900, and above that 20,200 is the next resistance. Above that, I believe 20,600 will come pretty fast. Okay, with that, let's move on to the chart of Bank Nifty. Okay, I'm quickly taking a look at the comments. We have Bharat Jainji. I'm good, Bharatji. How are you? Thank you so much for joining the live session. We have some stock queries, so we will take care of all the stock queries at the end. The objective of looking at the comments is to see if anybody's got any technical question. I would love to answer. Okay, so all our stock queries, which we will attend to at the end of the session. All right. Okay, okay. So Sailesh Patalji has a question that he's trying to look for the 75-minute time frame, but he cannot find. So Saileshji, I am using TradingView, and my TradingView is a premium version. So I can go in and create a customized time frame. And the reason why I use 75-minute time frame is that in a day, the number of minutes when divided by 5, they lead to 75 minutes, and I prefer the 75-minute time frame because when we are using an hourly chart, it leads to 6 full candles plus one residual candle of 15 minutes. That's an incomplete candle, which more often than not gives the false impression of a doji or a weak candle, which I do not appreciate. It basically ruins the integrity of the chart, in my opinion. So that is the reason why I prefer to use a 75-minute time frame. There are a few other reasons, and the reasons will be covered by me in details in my advanced technical analysis course. So if you're interested, I'm dropping the link of my Telegram channel. Please join my Telegram channel. And after this session, I will be pasting the link of my advanced technical analysis course in my Telegram channel. So you can register from there if you're interested. All right. So I hope, Saileshji, that was helpful to you. Now for Bank Nifty, we will again start from the 3-minute time frame. And what I can see is that on Bank Nifty in the last week's market outlook, which was posted on my YouTube channel, I had said that 44,800 is the key support level. Now that support level has been reached clearly, right? So here we can see Bank Nifty has already started taking support. Why? Because after reaching this level, okay, after reaching this level of 44,800, we can see that there is a blue trend line from which the index has bounced, come back, bounced, come back, and started to bounce and come back, and then the market closed, right? In doing so, in this volatility or in this consolidation or in this loss of momentum of downside move, what has happened is that the 3-minute time frame of the Bank Nifty has also given us a very good positive divergence, right? Which is great for us. So the 3-minute time frame of the Nifty and the Bank Nifty are telling the same story, that boss, they are indicating that I am done falling. I may be ready for a reversal, or I may go sideways. We don't know yet. So we will look for more evidences because we can't make predictions on the basis of a single observation. Okay. So what I'm seeing on the Bank Nifty 15-minute time frame is that some weakness may still be pending on the Bank Nifty chart. Why is that? Because I can see that the 15-minute time frame has shown significant weakness, right? However, there is also this positive divergence which has formed. What does that mean? So basically, a new low was forged here on at the end of the day on Thursday. Today we went and retested on a price. The price has retested that low, but RSI is nowhere close to its low. In fact, RSI is almost at 40. So where the RSI previously was at 25, it is now at 40. So we have a positive divergence, which is again a great news. So 15-minute and 3-minute on Nifty and Bank Nifty are both positive. Okay. So we'll go one time frame higher. One time frame higher, 75-minute time frame is telling us that there is nothing to worry for you at all, because on the 75-minute time frame, everything looks very, very bullish, and the RSI has just come down to the 40 level to take a normal correction, normal test of the support level. So 75-minute time frame continues to look pretty good. Here we may see a little bit more correction, and you can see why I gave 44,800 as the support, because just before this leg of rally, this 44,800 acted as a pretty strong resistance for the Bank Nifty. Right now, when we start going upside, 46,300 looks like our pretty good resistance level to look out for. Right now, on beyond that level, what should be our expected resistance or target for the next leg of upside, which I expect to unfold soon in Bank Nifty? I feel like this line may be a little bit higher, so I'm going to clone two more lines there like that, right? And I'm going to clone this level as well, and I believe this trend line is a very good expected target. So 47,350. 47,350 looks like a pretty good target for the Bank Nifty chart. Okay, coming on the daily time frame, a very mild negative divergence sort of has formed, because you can see this level 46,200 roughly has acted as resistance on Bank Nifty twice. Now, if you watched my previous market outlook sessions, you know that I personally see, I am bullish on banks, but I think the bullish momentum in banks has become a little overrated, and banks have run quite a bit. That being said, I don't want you to exit your active positions in banks, but if you have sitting cash, then now is not a good time to start buying banks. Okay, now is the time to hold banks. So if you go and start buying banks now, you're basically reducing the upside for your capital and exposing your capital to higher downside. Basically, your risk reward ratio will be compromised. Okay, and I have a principle of never participating in a stock unless it is giving a risk reward ratio of minimum 3. Of course, there are some banks which look quite, you know, positive, and let me just double check before I take any names whether my previously done analysis still stands valid, or do I need to revise something. Okay, so yes, so the reason why I opened the chart of Kotak Bank is because I believe Kotak Bank is one of the banks where if I had to put my money, then Kotak Bank would be my choice. I had tried to do a breakout trading few weeks ago. In fact, that was during one of the live sessions, but that was a fake breakout, and soon enough Kotak Bank reversed, so I took a small loss there, but my capital was preserved because I used stop losses from a 15% downside. Right now that Kotak Bank has come back to basically revisit the previously forged low of around 1750, I can see multiple positive divergences on the 75-minute time frame. And also the 15-minute time frame is starting to look stronger and stronger. So if you must go for a pick, a banking pick, then I think Kotak Bank would be my choice for you. However, again, I just want to emphasize, I wouldn't suggest you to act on this unless you connect with me, because it's not enough to know the name of a stock to make money. You need to know the right time, the right price, the name of the stock to enter, and then also the right time to exit and the right price to exit if you want to make money in stock trading, right? And usually doing that without the help of a licensed analyst is telling that you don't, it's as good as saying that you don't love your capital and you would rather just throw it away to the market and give it to someone else. Not a very good attitude, right? All right, so I'll just quickly take few comments. Bipin ji, I don't know what you mean by support and resistance in trading view. Uh, Rakesh ji is asking, during bear market, is it possible to do swing trading? So no, Rakesh ji, since swing trading is focused on upside bets or making bets on the long side, in the bear market, it is of course possible to do swing trading, and we do swing trading, but it's also very, very risky. So you have to be a lot more choosy in the bets that you take, and you have to be a lot more risk averse. You have to make smaller bets than you would usually in a strong bull trend or strong upside market. So it is possible. The rules of the game are slightly more conservative when the market is, in a correctionary phase. That being said, at any point of time, it will never happen that, all the stocks in the market are falling, or, all the sectors are correcting at the same time, nor does it happen that all the sectors rally at the same time. So at any point of time, there will be sectors which are rallying, there will be sectors which are topping out, there will be sectors which are bottoming out, there will be sectors which are in full blown downtrend, right? So, there are 5 phases in any trend, and any point of time, there are sectors which are engaged in this. And that is the reason that I do sector rotation analysis every single week. And when I recommend stocks to my members of the Trade Together program, I give them recommendations from sectors where I'm expecting the momentum to come in, right? So, over the last few weeks, months, my members have been holding positions in metals, banks, cement stocks, chemical stocks, so on and so forth, paper stocks, sugar stocks, before the rally in these sectors started, not after, right? You start reading them in news, in headlines, other videos, YouTube, a lot after the rally has come. And by the time exhaustion starts setting in, is when you start seeing all sectors, hot sectors being spoken about. Your hot rally is suddenly being talked about everywhere. That's the time when I start recommending tighter stop losses and profit booking to my members, right? That is something for you to know. Now, um, Bipinji is asking, can we use Cambrella as support and resistance? So, Bipinji, there are people who use Cambrella as support and resistance. I personally don't believe in that because it is highly subjective. And I personally actually haven't really experimented a lot with Cambrella because, see, irrespective of what tool or indicator you use, you have to do a lot of trial and testing with respect to the time frame and the setting. So, for instance, um, the 4 EMAs and the RSI setting that I use, I did not just, do my CMT and start using this. I did a lot of trial and error with different combinations for 2 years, did a lot of journaling, documentation, back testing, cross testing. And then after, like after 2 years of relentless testing with these and other indicators, I have come up with this setting. And with Cambrella, I tried to do a lot of testing, but it didn't really add a lot of conviction for me. In fact, it constantly gave a very false sense of strong support resistance. So in my study, when I refer to any level as a support or resistance, I don't look at one single criteria or a indicator. So my source of support resistance comes from trend lines, from exponential moving averages, and horizontal zones. So all three of them come together, and only when it's a very strong level or lots of different time frames, EMAs and everything is coinciding, then I go ahead and mark my support resistance levels with these green horizontal bars that you're seeing. All right. So Neha is asking for me that I also discuss the mid cap Nifty. Sure, Neha, I'll do that for you. Nifty mid cap. All right, Nifty mid cap 50. We'll go with this. Okay, so we can see that the mid cap sector has given like a super fantastic upside rally. And here, what I'm seeing is that, okay, there has been a pretty good dip, and a series of trend lines got breached. So, okay, so this fall that we see right here, okay, this massive decline, it makes me a little uncomfortable. Okay, why does it make me a little uncomfortable? let's talk about that on the 75-minute time frame. The reason it makes me uncomfortable is that not only did the RSI fall drastically below this level of 70. Okay, I'm going to draw a horizontal line here on Monday, and then we can clearly see how they have fared, from a zero starting point, how they have fared throughout the week. So the PSU bank was very volatile. It started off pretty strong with almost a 5% gain, but it then came to, it lost all of that 5% gain and finally closed the week with nearly a 4% upside. One thing that I want to tell you is that any sector, before it is topping out, it gives very volatile moves. Okay. And this chart right here is showing that very clearly in Bank Nifty, PSU Bank Index, right? So that is something to note, and that also reinforces what I told you, that banking sector on the whole is not where I would look for fresh opportunities. Sure, there is more upside, there definitely is more upside, but that upside is not enough for me to go ahead and risk my capital at this point of time, because I don't see the risk reward ratio in most banking stocks as more than 3. Of course, there are individual ideas, but overall the banking sector does not look great. So if your portfolio is banking heavy, the reason I'm telling you is that if your portfolio is bank heavy, then you should take help of a research analyst and get your portfolio analyzed to get actionable advice about what you should hold, exit, or add more. If you need my help, again, my Telegram channel is a great way to connect with me and take help on that. So PSU Bank is pretty good. CNX, the PSE sector was close behind with, it managed to close in green, but most of the sectors we see did close in a little bit of green. We can see the metal sector actually fell the realty sector actually fell quite a bit. And honestly, this correction in the realty sector was also quite expected because the realty sector has given a fantastic rally. So this was a pretty healthy correction. So in my last week's market outlook, I also did say that I'm not very bullish. I didn't say I was bearish, but I did say I'm not very bullish on realty, infra, and the metal sector. And we can see that the metal sector and the realty sector are actually the biggest sectoral losers this week. Okay. The infra sector, on the other hand, managed to outperform the CNX Bank Nifty just by few points, right? Sectors that I am bullish on for the next few weeks would be healthcare, healthcare, durable, consumption, FMCG. So I see great opportunities in these recommendations. In fact, some of the few stocks which have survived stop losses in the whole, ordeal of last week belongs to these sectors. Okay, FMCG and pharmaceutical and healthcare. So I expect a strong leg of upside to begin there. The IT sector, on the other hand, while for the long term it's very, very attractive. So if you are looking for opportunities to invest for like the next 3 years, 4 years, IT sector is a great place. But for short term opportunities, I think it's still not time for IT sector. It may come into momentum, or it may become interesting to us maybe a month or two down the line. But right now we'll play in pharma, healthcare, and FMCG sector. And of course, few more sectors. Energy sector is also pretty good, right? Oh, chemical sector also continues to be pretty bullish. So that's that. All right. With this, what I'm going to do is I am going to start uh, answering your stock queries. I also see some people asking me about options. So let me just tell you that I am not an options trader and I don't give any options recommendations. In fact, for retail traders, I strongly discourage the use of options. In my opinion, it's a slippery slope, especially if you're playing on the long side of options. Okay. All right, let's see. We have Rameshji and he's asking for Shipping Corporation of India. He bought it at 155. Shipping Corporation of India bought at 155. Okay, so Rameshji, just repeat with me. Never buy a stock after the rally. So what you have seen, you've probably done a FOMO trade. That is, you had the fear of missing out the strong rally that was unfolding and you bought the stock at 155. Not a very good idea. Your capital deserves better. Okay. That being said, what I am seeing is that the uptrend is pretty strong and you will not need to incur a loss in this. The momentum is expected to continue. Okay. You should, however, maintain a stop loss, and your stop loss would be at the level of 127. With that stop loss, I also have to give you an upside, right? Let's look for a good upside. So I'm going to remove these trend lines. They look a little messy. And I am going to draw my maiden trend line. I think this looks pretty good to me. And then, okay, my internet is a little my internet is a little weak, but hopefully we'll be able to get through with the session. All right, so we're going to remove that trend line because more data just loaded up. So what I'm seeing is that these 2 points are there, but then we also have these 2 points. Okay, so these 2 points look much better than these points. So we're going to take this as the maiden trend line and we're going to start cloning it to get a good sense of the correction in the market. So that doesn't help us in the direction that the price is unfolding right now. So let's see if these do a better job for us and conform to the price activity a little bit better. Okay, it does conform like a little bit better than the previously drawn trend line. So what I'm going to do is I'm going to stick with these and I'm going to remove these, because if you've seen my analysis, I don't like to have conflicting trend lines on my chart. So when I go with trend lines, I prefer to stick with trend lines of one single slope in the direction of the underlying trend of the stock. So what we're seeing here is that the stock has recently, and this is a weekly time frame mind you, but the stock has given a massive breakout above a key resistance trend line with good volumes. Okay, with good volumes is very important. And you probably did a breakout trading or something here, right? That is why you've probably bought at the top of a trend. But I would recommend you to please use a stop loss of 124. Earlier I think I said 127, make it 124, right? Now what would be your target? I think you can continue to hold the stock pretty well for a target of, I think 175 is a pretty good target, but even when 175 comes, I would recommend you to check back with me so that you don't miss out on more probable upside. All right. Let's see. So for HFCL, please connect with me, Rameshji, in my Telegram channel. I'm going to move on to another person's request. Okay. So I think Bharat Jainji is asking for UCO Bank. All right. So UCO Bank is one of the banks where the uptrend continues and with strong volumes. That being said, not a very good time to make fresh entries. That being said, not a very good time to make fresh entries on the chart. Because if you see here, a negative divergence has started forging, which is not to say that the uptrend's gonna come to an end, but it does kind of tell us that, you know what, the momentum is not as strong as it used to be. So continue to hold UCO Bank. Do not make fresh entry, but please use the stop loss at the level of 39. And when the stock has given a sustained breakout above the level of 48, then please connect with me again for a revised stop loss. So that was UCO Bank. So Raghavendra ji, you want me to suggest the best penny stock for long term? I hope you understand that investing in penny stocks comes with significant risk, and especially if you're taking penny stock recommendations for free from analysts that you're not personally connected with, please understand the value of your capital. Please understand that you've already paid 50% taxes, when you take into consideration direct and indirect taxes on your capital, and you're also incurring a huge opportunity cost on the money that you put into stock. So it is not recommended to take unnecessary risks like intraday trading, penny stock investing, or um, options trading unless you have unparalleled intellectual and analytical prowess there. All right, so that was my 2 cents for you, Mahesh ji. No, Raghavendra ji. All right, so we have Jayanta Bose asking for Nalco at. All right, so Jayanta ji, I don't recommend on futures, so I will not be able to tell you about. I will not be able to give you recommendation within your September expiry. I will, however, look at the cash segment of Nalco and help you out with that. It's, I think, National Aluminum Nalco. Yeah, I think that's what it is. Yeah, National Aluminum Company. So, okay, underlying trend again strong, and it looks like some correction that has been unfolding since the 4th of November. That is the beginning of this month, and like 12% correction, pretty massive. It looks like the correction has, run its course, and I would expect a little bit of upside. Okay, some more downside may be expected here. Okay, in Nalco, I think it can go as down as 90 rupees here. But then upside may start to unfold. That's all I have for you. See, for retail traders, I really don't recommend you to do any kind of leverage trading because, while it may look very attractive when things are going in your favor, the problem is that when things go against you, it takes away more than it gave you. JP Power. JP Power looks like trend exhaustion is setting in. So if you have a current position, please maintain a stop loss at the level of 9.85. Kamal ji, hello to you too. Janardhan ji, hello to you too. Please do join my Telegram channel. The link has been pasted by me in the comments. I'm going to paste it again right away for you. All right. Kind of losing my comments repeatedly. So Ramesh ji, I'm gonna help you out with Hindustan. Actually, I'm gonna help you out with SJVN because a lot of interest is coming in. I suddenly see SJVN at the forefront of news channels, YouTubers. So let's quickly take a look at SJVN. And for Hindustan Oil Exploration, I'll request you to please connect with me on my Telegram channel so that others can also get an opportunity to get responses. So SJVN incidentally was the stock covered a project in the first ever stock market related course that I had done when I was still in college. So that was back in 2014. And then I had given a strong buy recommendation in SJVN, because of the fundamental coverage that I had done, and the stock gave a pretty good, 70% rally there. I was hoping it would give 100%, so I could have called it my first multi-bagger, but it didn't. But anyway, so what we are seeing is that, okay, strong momentum unfolding in SJVN with very good volumes, which is great. Stock has come down to take a support at the 20 EMA on the daily time frame. Good. And the volume has also been superb. So while I'm a big supporter of the saying that never buy a stock after rally, I make an exception for a situation like this where stock is in strong bull run and the volume is supporting that continuation, then SJVN looks pretty prime for that purpose. The trailing stop loss, however, will be slightly bigger because the momentum is really strong. So your trailing stop loss will have to be around 61 rupees. Now, as for the target, now it's very hard to give target in a stock which is, just going like upside. So the best approach is to keep trailing your stop loss every time a new high is breached. Okay, let's see. Moving on. Okay, let me just take. All right, so we have 5 more minutes to look at some comments. So we're gonna do that. All right, so we have a query from Nida. She's asking for Jyoti Lab. She bought